everyone. Welcome to a new episode of Crypto Tips. Today we have a very special episode with a very special guest. Crypto Jebb is here with us today. Thank you for joining, Crypto Jebb. Or Jebb.
Thank you so much, Heidi. How are you doing?
Great. So for those of you who aren't familiar with him, I hope that you go and check out his channel after this video and hit subscribe and hit likes on all of his videos. He is a TA analyst at heart. No, a TA analyst, but he has a passion for helping people understand the bigger picture of getting your financials in order to live your best life. So all things that Toby and I are both on board with as well. So happy to have you on.
Thank you so much for bringing me on. I'm looking forward to it.
Okay, so right off the bat, I want to ask you about your opinions on the cryptocurrency space, for example. What's something that maybe you're most excited about being developed in cryptocurrency right now, maybe looking forward to 2022? What do you think?
Yeah, sure. Yeah, no, that's a great question. So the thing I'm really looking forward to in 2022 is, so there was an interesting statistic that I saw this morning. 70% of people that are in cryptocurrency right now got in 2021. I got in 2017, but 70% of the retail investors that are in crypto right now, in the US, excuse me, 70% of US investors have been in less than 12 months, got in 2021. So the thing I'm most excited for is watching, not just from I want these people to succeed, but also from a market standpoint, is watching these people continue to grow and progress and develop, because not only is crypto an amazing opportunity for all of those people that just got into crypto, a lot of them are probably watching this video, but it's also an amazing opportunity for the market itself, because as people mature and develop in the cryptocurrency space, they learn more about how to, read markets, do fundamental analysis, understand which coins to pick, then they actually become much more smart money. They become much more in the hodling mindset. They end up holding on to projects longer, and it actually ends up with the market being a lot more stable. So in 2022, I'm really looking forward to seeing all of those people that are new to the space progressing in a way that not only builds them into more successful crypto traders, but also helps for more stability in the cryptocurrency market as this industry continues to mature.
Yeah, absolutely. That's a great point. And although, most people who do come around during a bull market don't tend to necessarily all of those people stick around through the next bear, but it is a new surge of people, a new chance for more of those people to, like you said, be longtime holders. And I think, yeah, I agree with you. The more people that we have joining here, the more people who are inspired by it can possibly also be contributing to it, whether it's starting YouTube channels or creating educational content, creating more educated investors, and supporting that, self-regulation aspect of crypto that is so much needed. So yeah, great point.
Yeah, for sure.
I love that. I mean, there's so much opportunity here.
Yeah.
Every time I hear like America, I'm thinking, okay, regulations, government's going to crack down on even more exchanges. What are your thoughts on all this?
Yeah, no, that's a good question. So obviously the regulation is coming, and this is something I've been talking about for a while now, is the regulation is coming to a few different areas. One of the big areas that people don't talk about are stable coins and privacy coins. I think we're going to see a lot of regulation targeted in those areas, for one. And the reason for that is stable coins. A lot of regulators look at stable coins and say, stable coins are a way to get around taxes. Stable coins are a way to not have to report things. Stable coins are yada, yada, yada. And whether it's true or not doesn't matter, but the regulators are going to say that because obviously it's the government's unfortunate prerogative to take more power. That's how that always works. And also they're going to go after privacy coins because they do kind of have a case that you could theoretically money launder through a privacy coin. So I think regulation is going to come down hard on those. But more importantly, I think regulation on crypto itself is going to come in a big way because they're targeting those because they have a reason. I don't agree with their reason, but they have a reason to target stablecoins and privacy coins. But I think we're going to see regulation and negative sentiment towards crypto in general because the Federal Reserve has the power of life and death over the entire world's economy, and they don't like having any threat. Heidi, I met you on a Naomi Brockwell show a few weeks ago, and we talked about on that show some of the things that a nation is probably going to need if it's going to adopt Bitcoin. And one of the things Naomi said was that a nation that's going to adopt Bitcoin is probably a nation that doesn't have a money printer, because a sovereign nation gets its power from its money printer. America has the most powerful money printer in the history of mankind. So obviously the Federal Reserve can say whatever it wants. but it doesn't like Bitcoin because it knows Bitcoin is a threat. Because Jerome Powell came out and admitted in front of Congress, he's the chair of the Federal Reserve. He came out and admitted in Congress, hey, inflation is causing people to not be able to pay gas. They're not being able to, they're not being able to meet basic necessities. And I'm just sitting there thinking, then why did you allow the Federal Reserve to print half of all the US dollars in existence in the last 24 months? I mean, it's so the Federal Reserve is not going to be the biggest fan of Bitcoin because, criticism whenever Bitcoin succeeds, it shines a light on the weaknesses of the U.S. monetary policy and the fiscal system in the United States. And so Bitcoin is probably not going to be very popular, it's not going to be very popular on Capitol Hill as it gets more popular in the general public.
Yeah.
But I think it's too late too.
Cat's out of the bag.
I mean,
cat's out of the bag.
What 40% of all U.S. currency was printed over the last 10 months or 9 months? Like
something to that tune.
Monetary inflation is going crazy, but they're still sticking with the CPI, which is interesting that Powell said oil. Because the CPI doesn't really include food and energy. Really?
Yeah, the CPI is a really interesting metric because it is a metric that is created by the people that it's supposed to tell on. So that's why I don't put too much stock in this. It's funny, if the CPI says 5%, then it's probably 25% because the CPI is provided by the people that the CPI would be exposing. So how reliable is it really, in my opinion?
Yeah.
Yeah. The CP lie. That's
the CP lie. I like that. I've never heard that. I'm going to take that. That's good, Toby. That's accurate.
Yeah. So is that, I'm guessing that was going to be my next question, is what are you most concerned with the development of cryptocurrency looking forward? Is regulations, in your opinion, the biggest threat for crypto?
I don't think so. And I don't think so because, like we talked about, Pandora's box is opened and it will not be shut. People, there was an argument to be made that Bitcoin could be killed or would fail 5 years ago. That was a possibility. That's not even in the realm of possibility anymore, in my opinion. I think the biggest threat to crypto is actually not a physical one. I think it's an ideological one. I think the biggest threat to crypto is people forgetting why it was created. Bitcoin was not created to make us all rich. It was created to make us all sovereign over our own finances. That's why Bitcoin was created. It was created to take the power back into our hands, because when central governments have the power over the currency, it normally doesn't end well for us. And it normally ends up, if you look throughout history, it normally ends up with hyperinflation that will literally destroy a civilization. You saw it happen in Rome. You saw it happen in a lot of kingdoms in Africa. You've seen it happen in Polynesia. You've seen it happen in pretty much any nation that debases its currency over a period of time to fund the short term by stealing from the long term. What are we doing now? We're funding the short term by stealing from the long term through the process of inflation. I think the biggest threat to crypto is people coming into crypto and seeing 1,000x APY yield farming, or a punk that they bought for $5,000 is now worth $500,000 or whatever the NFTs are worth, and they see all this money that can be made and they go ching, and they're like, oh my gosh, look at all this money, and they forget the point wasn't the money. The money is a happy side effect of the biggest technological financial revolution in the history of mankind, and that is distributed ledger technology, blockchain technology, and Bitcoin being a store of value. I think the biggest threat, and this is where you and I and everybody and all of our colleagues here on YouTube come in, and I think, are doing a great job of reminding people of this. It's like, hey guys, look, yeah, there's a lot of money. Go get your financial sovereignty. Go get your financial freedom. That's incredible. But let's not forget that crypto was not made to make you rich. It was made to make you free.
Exactly. Yeah. I know we're often talking about, our plans for after the bull run, our profit taking, what we're going to do with our Bitcoin. Yeah. And we're always saying, like, we're never going to sell all of our Bitcoin. We're probably going to sell maybe a small fraction of our Bitcoin, because we want to keep holding it. And people don't understand why we don't want to take advantage of the swings. And our answers are always the same. It's a long-term perspective. And quite frankly, it's because we believe Bitcoin is going to be a tool to use far more than just something, again, to earn a profit from, to actually, like you were saying, enact that freedom that it grants us. And furthermore, cryptocurrency is so free right now for anyone who wants to invest in it. Now you can borrow against the value of your Bitcoin. You can borrow against something that is such an immutable property that's exclusively owned by just you, and to capitalize it in ways that were never available for many people around the world. I think it's an incredibly freeing opportunity for a lot of people for a lot of different reasons.
Well, also it's
Absolutely.
property rights. Like, I mean, it's the ultimate property right, because you can't get it stolen from you without, you know, I mean, you can imagine it and having your seed phrase in your head. You know, if somebody wants to rob you or whatever, they can go, hey, give me your money. If you don't want to, well, they can shoot you, but you know,
and then they can still take your money.
No, but they can't take your seed phrase, and then they lose all your
and that's what inflation is you put $100 under your mattress and you come back in 50 years and now it's only worth $10, and they never even had to touch the dollar bill to steal from you. That's what inflation is. It's a silent tax that steals from you, and that's why all of the best cryptocurrencies either have a very, very low inflation rate, or they are on a fixed schedule of inflation like Bitcoin is, that will taper off into nothing. That's why the burn rate on Ethereum that was implemented with EIP 1559 last year was so important, is that it didn't make Ethereum deflationary, but it lowered the inflation at the time by about 70%. That allows your Ethereum to hold its value more into the future than ever before. And the US dollar does not and has not had that property in a very long time.
Yeah,
it's not programmable either. So
yeah, no, it's not. Well, not by us anyway. It's programmable by the Federal Reserve whenever they want to manipulate the economy.
Not open source, and we can't audit it.
Yeah, for real.
So speaking about the Fed and the destruction of governments and their currencies over time through inflation, there's always kind of this gray cloud hovering over, what could possibly be happen. When's the next big financial crash going to happen? What are some indicators that you're looking at that other people can keep an eye on, just to try to have a heads up and try to hedge that as best they can?
That's an interesting question, because after 2008, everybody said that recession wasn't deep enough. We're going to have another one this year. And then 2012 came along. They said this year. And then 2013 came along and they said this year. And then kicked the can down the road. And then we had a little crash last year, 2 years ago in March of 2020. I can't believe it's been almost 2 years. And that wasn't really a deep enough correction either. What we need, and it's going to suck, but what the market needs is a deep, painful, bloody correction. That's not popular, but when you keep putting a Band-Aid on a bullet hole wound every single week and you never actually take the Band-Aid off and do surgery on that thing, it festers. And that's what the global economy has done right now. We keep putting a Band-Aid on a bullet wound whenever the economy is trying to chug along, but it's got this infection, and it's had it since at least 1971, when we went off gold standard a lot longer ago than that. And if you study Keynesian economics, if you've read the Bitcoin Standard by Safadine Amos, he talks a lot about this in that book. Phenomenal book. It's been called The Gospel of Bitcoin. Book you definitely need to read for everybody who hasn't. Whenever what the Federal Reserve is doing right now is kicking the can down the road, because it says, okay, well, by the time we catch up to the can, I won't be in office. It won't be my problem. I won't get the blame. I won't go down in history as the guy that was in office when that happens. And we keep money printing. We keep interest rates low. We keep kicking the can down the road. And so the problem is that we should see a recession right now, but we're not. And we've never done this as a society. We don't have any historical precedent going back the last 6,000 years of human civilization where we've managed to kick the can down the road for 150 years and still maintain a crazy amount of economic growth. The only reason that's happened is because of a boom in population led by technological development and increases in agricultural output around the world. We have never seen what happens. So we don't have historical precedent to say, okay, can this thing go on for 5 years, for 10 years, for 20 years, for 30? We don't know. But what I can tell you is that there might not be a recession this year, but there will be this decade. And it might not be a deep, bloody recession like what that bullet wound has turned into, but it's going to happen at some point. And when it does, whether it's this year, next year, 5 years from now, 10 years from now, 20 years from now, there are going to be two kinds of people. And they're going to have two different outcomes. One are going to be the people that have invested in the traditional financial system, that have invested in the US dollar, that believe that an infinitely inflatable currency is going to be a good store of value. And then there's going to be us, who are in Bitcoin and who are in distributed, immutable, limited supply, and digitally scarce cryptocurrencies such as Bitcoin. Ethereum is not quite as digitally scarce as Bitcoin, but it's close. Or, all the other projects that have digital scarcity that are immutable and they cannot be banned by governments. They can try, they will fail. It's that simple. So there's two people, the people that are going to be in the traditional banking, in the traditional financial world that are going to get hit the worst. And then there's going to be people in Bitcoin. Now, let me be clear. They're both going to be hit very hard. If the stock market crashes, Bitcoin will crash along with it. But one of them will rally much faster in the 2 years that follow. And it won't be the stock market. It will be Bitcoin and the rest of the crypto space.
Yeah.
Yeah, I agree. I've heard people say, traditionally people run to the US dollar in times of uncertainty. So that could create it to be, pretty strong, but maybe too strong, and then it would collapse. And then people are going to look for the real hedge against inflation. And that's always been Bitcoin. So
yeah. And also the other thing, if I may real quick, is that people have always run to the US dollar, but in the last 2 years, after all the money printing, following the thing that we had happen in March of last year, I don't know better than to say that, following what happened last year was the word inflation became a part of the narrative. And a lot of people realize that now. And especially as Bitcoin continues to grow, people are going to understand that the US dollar is not as stable as it was, and Bitcoin has shined a light on that weakness.
absolutely.
Yeah, I mean, it's unfortunate you have like about 60 countries that have dollarized their currency because they've failed currencies. So imagine what's going to happen when that, the US dollar just goes kerplunk with those countries that are, dollarized. And if the US dollar does, implode, that could really lean them over to a Bitcoin standard, in my opinion. I mean, where else are they going to go?
Follow El Salvador?
Yeah.
Yeah, I agree. I think we're going to see a lot of that. There's a bill in the Parliament. I'm not sure what system they have, but I think it's in the Parliament of Tonga right now, which is a small nation, talking about Bitcoinizing their nation and their currency. So I think we're going to see a lot of that happening.
Yeah. And so talking about, how these kind of major macroeconomic situations can affect Bitcoin and its possible price predictions. You as a TA analyst, how do you see Bitcoin and its traditional 4-year cycle? Do you think that's going to be shifted? Do you think that's already been broken this year?
Yeah, no, that's a good question. So a lot of the 4-year cycle is very much on everyone's mind right now because it looks like it's being broken. Let me say this and I'll explain why. This year, 2022, will be the year that we will more than likely find out if the 4-year cycle has been broken. Last year was too early. 2023 will be too late. We're probably going to find out this year. And ever since I got into crypto in 2017, I've always been like, okay, the 4-year cycle is active now. I was saying that in 2017, 18, 19. But eventually it's going to break down. And the reason it's going to break down is because the halving gets half the size every single 4 years. So it becomes half as potent, half as important every single 4 years. So the question really is, does it become such a small issue this halving, which the last halving took place about 2 years ago, a little less than 2 years ago, or does it happen next halving? I personally do think we're going to see a breakdown of the halving cycle, but I think we're going to see echoes of it for this decade, but by the end of this decade, it's not going to be that big of a deal. I don't put a lot of stock in the halving anymore, just because we've seen so much fundamental development, so many different developments, industry sector wide, that have nothing to do with the supply of Bitcoin. And we've also seen Bitcoin's market dominance drop from 90% in February of 2017 to 38% where it is now. The altcoin space has exploded. It's not all about Bitcoin anymore. So I don't think it's going to be as important as it used to be.
Okay. Well, okay. So there were 70%, you said, of Americans in 2021 that were onboarded, right? So wouldn't that number increase, and that increase of number, wouldn't that affect the price, when we do have the next halving? So for instance, we onboard another 70% of the people that aren't invested in Bitcoin, and we have a halving. Do you think that's going to have an impact?
Absolutely. Absolutely will, because the thing people need to realize is that price is downstream of fundamentals. The adoption is a fundamental. The price follows the fundamentals, not the other way around. The fundamentals, you can make an argument in some way they follow the price, but the fundamentals drive the price. The fundamentals are upstream. They're the spring. They're the snow melt that drives the price. So what we've seen this year, last year, 2021, was an explosion in price. Where did that come from? Well, if fundamentals are upstream, it came from fundamentals. So let's look to the fundamentals. What happened? Oh, right. The number of retail people in the space increased by 250 something percent. So that's where that came from. If we see another, 200 to 300% increase in retail adoption, which I do think will happen in the next year or two, moving up to the next halving in 2024, I believe it is. Absolutely, that's going to lead to a huge increase in price. In fact, I do believe that we're going to see $1 million Bitcoin before the decade's out. And I think before this bull market's over, because I don't think it is over, I think we're going to see approaching a $200,000 Bitcoin, if not even a little bit higher, because of the number of people getting into the space. This thing is not an industry that goes through 1 year of hype and then 3 years of boredom anymore. This is a much more stable industry because of its breadth. The altcoin space has gotten so big that there's so much going on that even when Bitcoin's boring, NFTs are doing well, blockchain gaming is doing well, the entire DeFi space is doing well. So it's a much more stable network than it used to have been of projects. That's
very true. And the income that people are gaining from those are, being injected into other cryptos as well. It's really interesting.
It's kind of nice, actually.
Yep. It's a full-fledged economy now. It's not just an asset. It's a full-fledged economy. The crypto economy, like a couple of years ago, I transitioned from calling it a crypto industry to the crypto sector, because a sector is made up of industries. There are different industries forming within crypto, and the rest of the world doesn't even realize that Bitcoin, that crypto is an industry, let alone that it's a sector and it's an economy in its own right that will support itself because it's so robust now.
Yeah,
absolutely.
Yeah.
Wow.
Like, it is so robust that you're going back to when we were talking about like regulations and like if regulations will kill Bitcoin or whatever. Like, I mean, there's 60 million people onboarded right now with crypto or more.
Yeah, probably
maybe
more.
In the US.
That's what we know of.
In the US alone. So like,
yep.
I mean, they're gonna have to arrest, go after 60 million people. It's
not gonna happen.
Too late.
Not gonna happen.
Yeah, it's great. Yep. So fun.
Nope.
Yeah.
Nope. It's not gonna happen. It's like no, it's not gonna happen.
There's no guarantees in crypto, but there is that.
Yes, for sure.
Yeah, you're not gonna arrest 60 million people. I mean, they might try, but it's not gonna work out for them.
Sure.
Yeah. Well, thank you
for that.
Thank you so much, Jebb, for coming on our channel. I hope that you enjoyed yourself, and we'd love to have you on again in the future. This is a great conversation.
Love that.
And we'll put all of Jebb's links below.
And check out Crypto Jebb on YouTube, subscribe, like his videos. And if you haven't subscribed to Crypto Tips, what are you doing? Hit subscribe
to Crypto
too.
Tips. and is it learningcrypto.com is your site? Did I get that right?
Yeah. We're building a website to host our membership. So yeah,
there you go.
Great.
Thank you so much for having me, Heidi. I really enjoyed it.
Yeah, same here. So we'll see you soon.
See you.
Bye.